Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. All right, so we sent out the chart blog. We sent out the pivots a little bit earlier. If you haven't had a chance to check those out, please do so. Those are on a variety of social media, but it all leads back to our Circle community. There's a sign up for that. Subscribe to that. It's free. Come in there, get the notifications, have everything shot straight to your phone into the Circle app. It is the cleanest way to make sure that you don't miss any of the content that we have going. And it's the best way to really learn how we do things. And, if you're inclined to come in and let us get you some help. These are not easy markets, and we are here to help. Daily chart. The green line is the middle Bollinger Band, the 20-day simple moving average. It's the deal right now. They've tried for the last 3 sessions to turn it into resistance. So far, it's support. They traded below it yesterday. They didn't close below it. And it was support back on Wednesday, support so far today. Now, there's a lot of today left. And the most important part of today, at least for me, is where we close relative to that green line, which is 43.65, 43.67, depending on how things jiggle during the course of the day. You can also see here on the daily chart that we are just jammed in amongst a bunch of moving averages. The red there is the 50, yellow one's the 100. We just talked about the 20. That's the 9-day. So for the last 4 sessions, here we are. And for me, it really is setting up the next short-term leg of this tape. Is it going to be resistance at the 50 that breaks down, we go back and we start dealing with the 200 again, potentially go deal with the lows again? I don't know. They've got every opportunity. Remember, it wasn't all that long ago that we had, is this it? Yeah, you had 43.50 and you had 44.34, 65. You had these other areas that were really hanging in as, and this was what's that, 42.77, yeah. That we're hanging in as, potential support, potential lows, potential this, potential that. And eventually over time, they all got broken, okay? So the fact that we haven't been back down to 42.35 is not fatal by any stretch of the imagination. I may get annoyed with the bears. I spend most of my day annoyed with the bears. I'm annoyed with the bears while I'm short, okay? I'm allowed to be annoyed with the bears as much as I want because they're annoying. Told myself I wasn't going to say any. I wasn't going to drop any bombs today. But the bears are all that, okay? But just because they're taking their sweet time creating a bunch of higher lows doesn't mean we can't go back and revisit this. One of the cleanest ways to do it is to seal off the 50, break the green line, deal with the 9-day, start the week somewhere down here next week, and go ahead and try to make a run. So there's a lot on the line here. Hourly chart, you can see. They tried to trade it below yesterday. They couldn't get it done. This was that drop from they had a 30-year bond auction yesterday at 1 o'clock Eastern, which is usually not a huge deal. They pop up on everybody's screen. That's nice. Move on. They cared yesterday. It was about 50 basis points higher than what they were expecting, and it moved the tape. So what I said on my subscriber webcast last night was, I have to add that to the list of things that we're going to factor in when we're doing stuff. So until the market decides not to care again. Market decides what it wants to care about and doesn't want to care about, sometimes for days, weeks, months, whatever. We've had levels come and go over the years, and everything's different. And really figuring out what the market cares about and what the market doesn't care about on a daily, weekly, and monthly basis is a huge part of my job. And it's one of the parts of my job that I enjoy the most because it's never the same. And if you get it right, it's a great way to not only book handles, but to take a lot of risk out of the tape, which is always the most important thing if you really want to grow your account. So you see here the 2 red circles. Didn't get it done at the daily mid-band. Didn't get it done at the daily mid-band. Now, hourly mid holds it in here, holds it in again. That is sitting at 43.82. So for me, our battle lines for the day are drawn between daily mid and hourly mid. What's it going to be? These middle Bollinger Bands are so important. So important. That's why I teach them. So we'll see who wants to do here. Now, convert it. You get back to 4,400. You get back to the monthly. And what I would say to the bulls is you better not run out of gas up there because you looked really great there yesterday. If it breaks to the downside, you need to go after the 9. It's not that far away. Close below. Don't worry about this. It's probably out of your wheelhouse unless something really hits the tape. Anything else? Volume weighted average price 43.79. Proprietary moving average 43.74. All right, that's all I got. Everybody have a fantastic day, fantastic weekend. I may do a closing wrap up today. If I do, you'll have it, and you'll really have it if you like and subscribe and sign up for the free Circle content so that those notifications go to wherever you want them to go to, and that way you don't miss anything. And again, I invite you to let us help you. I think you'll like what you find. It's a great group of people, and we look forward to meeting you. All right, take care. Trade them well. If I don't talk to you, have a great weekend. Talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.